What is good, NIO family? It's Rey-Jay back with another video, and in this one I'm going to be talking about the one and only NIO stock and what you should be looking out for the future. I'm also going to do some in-depth technical analysis and give you guys my price prediction for tomorrow for NIO and talk about what on earth the charts are suggesting and what the data is basically showing us. I'm also going to talk about what's going on with the GDP report, with the Fed meeting, and when NIO's earnings is, so that you could be prepared for the next few weeks for NIO and the markets and everything going forward. Now, before I break anything down, though, before I get into any details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Don't take any of this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire NIO community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed 6 free stocks, each worth up to $3,500. And the best part is, out of these 6 free stocks, you could always sell them for cash and use that cash to buy some NIO shares for free. It's a limited time offer. It ends in just 6 days. So please check it out before they run out. With that out of the way, let's get on with the video. So NIO is down 1.57% as of right now, a little bit red in the after hours. And I want to talk about what on earth we could be anticipating for tomorrow and for NIO going forward. So for those of you who already know, or if you don't know, we have earnings coming up for this week, for the next week, and for the next 2 weeks. I think 70+% of all S&P 500 companies are going to be reporting their earnings. So this is going to be very important for the markets, the trajectory of the markets, how big institutions react, and the current state big businesses are in. So one of the things that happened during the potential phase in the markets is we saw interest rates go up, which will have an effect on the output of many businesses. It also slows down demand in our economy and other things like that. But additionally, I want to add something else to that, and something else that tends to be associated with recessions would be a drop in not just PE ratios, but also earnings per share. So if we see a drop in earnings per share, it's going to cause a lot of businesses to actually kind of slow down when it comes to their growth, when it comes to them making profits for their investors. And that could lead to some negative, price action in the markets. So from what I'm seeing right now, considering that we had those big lockdowns in China for like many months and all these things were going on, it seems very likely that a lot of businesses may have lost some profit, and I don't have very high expectations for this earnings. With that said, I do think that, okay, on a day-to-day basis, maybe the market's green tomorrow, maybe some moves like that could happen. I'm going to go into more detail about that. But overall, for the next 2 weeks, I do think we're going to see a little bit more red than green because earnings may not be that good. We also have the FOMC meeting coming up on the 26th through the 27th of July. Specifically, the 27th is going to be the bigger date because this is when we're going to find out if Jerome Powell announces the 75 basis point rate hike or a 100 basis point hike. And even though, like, for the short term, I guess you could say if he is a little bit more hawkish, it would be worse for the markets, worse for the stock market. For the long term, it would actually lead to a faster recovery. So it could really go both ways, and there are different ways to interpret it. But if we do see us approach this date, I do anticipate some more downside for the markets. We also have on July 28th, we have the GDP report coming out, and that's when we're going to find out if we got 2 consecutive negative GDP quarters. If that's the case, if a recession is announced, like officially, right, from a dictionary definition, that in turn may lead to even more downside for the markets. We could get a big reaction based off that. Now, for NIO personally, NIO has its earnings, I believe, on August 10th, so it's not really around the corner. It's going to take some time, and that isn't something too big for NIO. But other earnings, such as big tech companies, I know Tesla has their earnings on Wednesday, I think after the market closes. It may lead to some downside for the markets. Tesla could move the whole market. It's that big. And I'm saying that because their earnings report may not be that great either, because of the fact that they did see a drop in their deliveries and other factors like that due to the lockdowns and supply chain constraints. This is all pointing in the same direction, that downside seems a little bit more likely for the markets, and NIO is probably going to actually get pulled down like an anchor, in my opinion, for the next few weeks. Now, does this mean we're going to be red every day? No, we could see maybe some green tomorrow, maybe like sideways action, but overall, I am a little bit more in favor of the Bears. I do think that the Bears are most likely going to pull us down a bit. And let me show you the pattern I'm seeing from SPY. So the SPY is going to kind of, in my opinion, uh, be the big ship that's going to kind of show what the market is doing. It's going to be correlated with the Nasdaq, and they're going to guide what happens to NIO and many other companies like that. Now, one interesting thing that I noticed is that, okay, this is a little bit theoretical, but the SPY had a tendency of forming this triple top before breaking down, and you could see these three tops right here. You could see right here at 417. 417, then we like came to this resistance level, then got a breakdown. And recently, the SPY is showing something similar. We got our first like peak here, a rejection, a second rejection, and we're forming like a third rejection, almost like a W shape. And it to me, it looks like we might actually kind of like fill the gap up here first. So the SPY might run up like, I don't know, 1%. It could be a little green tomorrow. And after that, I do anticipate a big rejection. It's probably going to fill the gap down here and start dropping even lower, in my opinion. It might even fill this gap right here very soon, taking it down to the 360s after that. With that said, I am anticipating lots of bull traps. I'm seeing lots of traps coming. For NIO, what does this mean? So far, NIO has been respecting this downtrend. You could see I just drew it out for you, but there were moments where we actually broke out of it just temporarily. And we also have a gap up here. The only way, I really see NIO pushing so high to the point where it fills this gap is if the market rallies a bit before we see potential downside, or if we get our first few earnings to be very positive. But like I said before, I just think that's very unlikely. Also, NIO did break down below that $20 level, which is not a good sign. We touched 19.93. Now, when that happened, the buyers stepped in and they stopped NIO from dropping really hard, which is like, once again, pretty interesting to see. But so far, I'm just seeing the same pattern kind of continuing from here. So what could end up happening is NIO gets a push up. It gets a rejection off maybe like $21. And once it gets that rejection, slowly starts to drop. It may not happen the first day, but by the second, third day, I wouldn't be surprised if NIO slowly starts dropping to that 19 level, 19.7, 19.6, and we'll be on our way to filling the gap down here at 19.1. In my opinion, I just think it's a little bit more probable considering the factors in the market. Now, is it possible for NIO to push up and fill this gap first before dropping down? Yes, but so far the trend is showing that it's a little bit unlikely for that to happen. And we've been kind of respecting this downtrend, this pennant right here. It would take a big catalyst, a really good earnings report to really push the market up from a big company. It's possible, but like I said before, unlikely. Now, with that said, I want you all to be prepared for potential downside. I am a little bit more in favor of downside than upside, but I do believe there's going to be a trap to come because NIO has this another gap right here around that 20.95 level. I'm anticipating a nice open for NIO. NIO is going to push up, and then we're going to get a slow bleed off after that. Let me just show you some key levels. So what could happen to NIO is this. I think it's very possible in the morning we get a kind of like a nice push up like this. NIO may go back to like the 21s, maybe low 21s, 21.5 maybe. I'll be super bullish just to give you an example. Then NIO starts to trade sideways and we get a slow bleed off after that. We might see NIO show very high volatility, come back to the 20.8, trade like this. It may even come and start testing 20 again. This could be the sign that it just starts touching these levels again. It might actually hold 20. I really hope it does. If it doesn't hold 20, it's going to start dropping to the 19s, and it could actually be on its way to fill the gap at the 19.3 level. But I do anticipate a move kind of like this. I mean, we could have basically a sideways day, maybe a little bit red by close, kind of like this, around the low 20s. And I do think you should be prepared for a potential trap like this one. Now, if NIO did close green, if SPY did close green, that doesn't mean my whole sentiment is going to shift into the bullish direction. I think even if the market and NIO are up for like 1 or 2 days, I do still anticipate downside to come because of earnings, the Fed meeting, GDP, sentiment of the market, and all these different factors. Now, could it be the bulls are trying to play chess and kind of trick people into thinking the market's going to go down when they push it up? Maybe, but I'm just so far seeing that as something that's very unlikely. If you look at SPY, it still is respecting this downtrend on the overall daily chart, still not looking like it's ready for a big trend reversal just yet. So that's essentially what I'm seeing. I mean, even if we're green tomorrow, even if we're green the day after, I still see more red for the markets and SPY and NIO. And I really think, and I really hate to say this to all the NIO investors out there, it's not the best of things. I know people don't like to hear this. NIO looks like soon How soon? I don't know the exact date, but soon it's going to fill the gap down here in that 19.3 level. And let me actually use the 2 hour candles just to make this look a little more meticulous. Down here, I do see NIO filling the gap down here, $19 soon within the next few weeks. I also think NIO may, if the market turns really bloody, if NIO does get dragged down, this is another thing to keep in your mind, that 16 level. I know people don't like to hear it. I know it's frustrating. I know it really hurts some people, but it's the uncomfortable truth. That's what the chart is showing. NIO has been starting to descend, so don't be surprised if we do start to see some red days, all right? With that said and done, it's not the end of the world, all right? These are very good buying opportunities. This is an opportunity to sell covered calls or sell puts, depending on when you enter or exit and what your intentions are. There are opportunities that come during times like this because implied volatility in the markets is going to go up. That's the time to sell those covered calls if you want, or you could just day trade them on a day-to-day basis. You could even play it long if you know what you're doing. That's essentially what I have now. You get to decide what you want to do. It's your life, your money, your choice. I'm not giving financial advice. I'm just here to show you the charts, the warnings, and what on earth the data is suggesting. With that out of the way, I gave you my prediction. I do anticipate a potential downside soon for the markets. I can't guarantee that tomorrow will be red. I just think it's more likely than not. But I do anticipate more red days later on. I think it's very likely, regardless of what happens on Monday or Tuesday. With that said and done, get ready for earnings. Get ready for the potential Fed meeting, which is less than 10 days away. And I will most definitely see you guys in the next one. NIO to the moon, and peace out.